Hello to all traders, welcome to this Friday's Market Insights video on FX margins, euro, dollar, dollar yen, and pound dollar. Today we're going to see, we finally see investors being worried about the, I would say, non-consistency of economic data. The fact that unemployment benefits still rise over 1 million on a weekly basis. The fact that cases in the US, South Africa, Brazil, and many other countries keep rising when we started reopening the industries, which seems to suggest that, it was maybe too early to start doing that. The oil markets were affected as well, because obviously this is going to decrease demand for the oil, is going to decrease demand for transportation, is going to decrease demand for jobs as well. So rise in unemployment also lies ahead. That finally is moving the equities on the downside. Along with that risk, everything else is falling and the dollar is strengthening once again. When we take into consideration that China also, US imposed sanctions against China over Xinjiang detentions, then, that is spelling really a different story, right? Which makes one think, what is really driving the markets? Okay, so, we've got profit taking for sure. We've got, or better, we had the recovery funds in the EU supporting currencies, risk currencies, right? But what is really driving the markets? Well, there has been apparently a viral drug that was used to cure million patients of hepatitis C, okay? That treatment happened in Iran, and it seems to have very, very, very good results. So the question now remains, is really the hepatitis C drug going to be the antivirus to combat the COVID-19? Well, we are going to see, because we've had many of those trials actually popping on the news many times before, and we still haven't got an antidote. Euro dollar, X, W, and Y. We've been speaking about this pattern for a while. W, X, and Y, and we're waiting W, X, and Y. We have done ABC, ABC, and we're waiting for another ABC. This is going to be a double 3. We ended at the 78.6 Fibonacci retracement of leg W, and we're expecting now prices to move lower since we had this rejection over here. And we're going to go to probably around the 100 Fibonacci extension of W and X, which is around 111.16. That is potentially going to be W and then X and Y. Note that the 50 Fibonacci extension is a little bit, the 50 Fibonacci retracement of wave X is a little bit lower compared to the 100 Fibonacci extension at 110.26. So if we see an extended W, don't be surprised. The other case, of course, the other scenario is that, this is, we're still moving up for wave X, okay? So we had an ABC here instead, and this is 1, 2, 3. We are in the midst of wave 4. We're going to have another move to the upside, which still means that we can get down to 110 or so, right? And then have another move to our side for wave X and then move all the way down. Now, on dollar yen, also, WX, and we're looking at this as a triple zigzag. We're waiting for wave Z. But in the short term, we're done wave A. We are talked about moving down to the 61.8 Fibonacci retracement in the beginning of the week to around 106.87 and then move all the way up. Okay, so that looks like a very nice A wave. Okay, down here, then B and C, 1, 2, 3, 4, and it looks like we are going to end this as an ending triangle because, we've got one downside move over here, pretty much confirming this is 1, 2, 3. We're gonna get 4 and 5, potentially even below the 106.87, and then looking like we're gonna move up as the RSI also confirms or indicates. And pound, A, B, and C. We were talking about this ending diagonal here. The 100 Fibonacci extension can take us to 128.30. It would be some sort of truncated wave 5, which is usually the case when we're looking at end diagonals of the open diagonal structure rather than the contracting one. And then we can look for price to start moving lower to take out wave C, primary C, which is the it's expected to bring us to fresh multi-year lows, right? So we're not sure that's going to be the case. Now, wave 5 can come up to 130, 131 or so. This is going to be also in confluence with the descending trend line that started years back, I would say. And so in the medium term, we're actually looking at this becoming an ABC, right? Because it is a correction. So we had A done, B done, and we're looking at C, 1, 2, 3, 4. Well, it could be 1 as a leading triangle, 2, 3, 4, and 5. Now, the other scenario I'm looking for the pound is that this whole move from this bottom down here is an ending, is either a leading diagonal in 1 or in A, right? Which means that's 1, 2, 3, 4, and we're going to see again a similar move to the upside in an ABC pattern anyway, and then start moving lower. However, that low this time is going to take us to around 120, which is around the 50 Fibonacci retracement of this. Well, it would be if we get up to 130 or so. Okay, and that would mean more upside in the longer term. So thank you very much for watching, and I will speak to you again on Monday. Enjoy your weekend.